South Africa has seen various impediments to business activity, the lockdown restrictions, the July unrest, and now most recently the KZN floods. To find out whether insurance companies have proofed themselves for similar occurrences in the future, we now speak to Brandon Saunders, who's an Executive Director for Short-Term Insurance at ASI Financial Services. Thank you very much, Brandon, for joining us. Now, since the July unrest and the KZN floods, what are some of the lessons the insurance companies have learned?
Good afternoon, Mpumelelo, to you and your viewers. Thank you very much for hosting us. I think some of the big learnings that we've had is that certain catastrophes can occur, and a multitude of them in quick succession, and we need to be able to prepare for any eventuality. Very often, we have seen certain eventualities have been taken care of from a risk mitigation perspective, but to see a multitude of them in succession is something that the actuarial and analysts at all the insurers have to take into consideration going forward.
Yeah. So to what extent are companies future-proof for future occurrences, especially in light of climate change?
It's very interesting. I think from an entrepreneurial point of view and from a business perspective, we see that very often entrepreneurs have got their heads down and they're continuing with their business. So it's very difficult to fully future-proof any business. You have to have a look at the mitigating factors. You have to have a look at what you can insure against and what you can do to prevent certain things from happening. The best thing in that space for companies is to speak to a professional advisor to see where they need to be, how they need to manage their risk, and to get an expert in that space to guide them and assist them with that, particularly with all the changing socioeconomic and global climate change at the moment.
Yeah. On the flip side, what about the clients, your small businesses, your individual households and so on and so forth? What is it that they need to consider when taking out insurance, especially given all the very risky factors that we face, like climate change, as well as, high risk of violence as well in our society?
It's a very good question. I'm so glad that you asked that, because that question isn't asked enough. I think one of the fundamentals for any business and for any individual when seeking insurance is to seek professional advice. We'll go to a cardiologist if we have a heart condition, and very similarly with financial services, you need to seek a professional that's qualified in that space. And then to very, very importantly, be transparent and have a very frank and open conversation with your professional advisor to lean on their expertise in order to ensure that you understand exactly what you're insured for. Very often price is a big factor when insuring oneself, but the primary consideration is that you are appropriately insured, so that you fully understand the wording of your policy, you understand the exclusions in your policy, to avoid you being exposed even after paying your insurance premium due to exclusions that may have been in your policy. Something that we've seen recently in after the pandemic, the COVID-19 pandemic, with business interruption cover.
Yeah, well, as they say, there's nothing for mahala. With everything that's happened over the past few years, to what extent have we seen an increase in insurance premiums? And should we expect that if we want insurance, we're going to have to pay for it?
I would certainly anticipate that there will be an increase in insurance premiums. In the past year, we have seen that the claims, the percentage of claims has gone up more than the premiums have gone up. And the insurers are obliged and obviously need to ensure that they have enough solvency, in other words, that they have enough reserves to counter any of these catastrophic events that occur. And in order for them to ensure that they meet those obligations, and with the costs of living going up, I'm sure that we will see that. The other additional factor in that is the insurers obviously reinsure through international reinsurers, and when you see low interest rates that are longer and lower for longer, what generally happens is that they are not getting the returns on any investment money that they have put away in those reserves as they would historically have got had the interest rates been higher. So it's taking them longer to build up those reserves, and the only way to mitigate paying out more is to ensure that you're collecting enough premiums to cover all the parties that have bought insurance.
Brandon, thank you very much for your time there. Brandon Saunders, he's the Executive Director for Short-Term Insurance at ASI Financial Services.